welcome to this month's episode of Fintech Firebrand. I'm Virginie O'Shea, founder of Firebrand Research, and I'm here to chat to you about this month's Fintech and FinReg news. Now, over the last few months, I've been talking a fair bit about the dynamics related to 24/7 trading. We're not quite there yet internationally, but certainly in the US, there have been more than a few applications by existing and new exchanges to offer extended hours services. Now, we did see some approvals by the Securities and Exchange Commission last year. There's been a lot of changes at the SEC overall. But what we have seen, interestingly, is plans announced last month by the 24 exchange, one of the newer exchanges, to launch its new 16-hour trading day. And it's going to set up operations on the 29th of September, it says, focusing initially on investors from the Asia Pacific markets to offer them extended availability to US stocks. Now, it's interesting to see that this is something that the focus is on 23/5 trading eventually, but initially it will be only open for 16 hours. There is a lot of interest from the financial market infrastructure community on the impact of all this. There's been multiple different regulatory investigations into the topic, including the CFTC and the SEC on this topic. Call for evidence from the CFTC closed last month as well. We expect that there's going to be a lot more discussion in the industry about the impacts on operations, post-trade, risk management, liquidity management, cash management, all of these different things that we have to think about from a risk mitigation perspective and a human resources perspective. So definitely one to watch. As yet, we have not heard much from exchanges outside of the US on this topic. Certainly, it's something that is unlikely to be top of the priority list in Europe, given we've got quite a lot of market structure change. Thank you very much at the moment with T+1. And on the topic of progress with T+1, the industry committee focused on T+1 recommendations did, as promised, publish its report at the end of June. And they are seeking feedback from the industry on these proposals. They're non-binding, but they are recommendations for the industry in their preparation to the shortening of the settlement cycle in October 2027 within the European markets. They are asking for feedback and they want people's feedback before the end of August. So that means you're going to have a very busy summer if you're working in post-trade. Definitely something, your summer reading won't be books on the beach. It will be having to look at these recommendations and see how fit for purpose they are. They are roughly in line with a lot of the UK recommendations that we saw the task force publish in the UK task force publish in February, but there are a number of nuances, notwithstanding the fact that there are different asset classes involved. Obviously, the gilt market in the UK is already on a shorter settlement cycle. So definitely one to watch and something for you to think about over the summer. Another interesting FinReg development, one would say, is that start this month in July, the Financial Conduct Authority in the UK fined Monzo, one of the newer banks, £21 million for failings in its financial controls. So this relates to its customer onboarding, its risk assessments, and the period in question is between August 2020 and June 2022. So a number of years involved in that. There was a real focus on asking Monzo to look at how its customer onboarding and risk assessments were managed and its transaction monitoring systems. The FCA ruled that they fell short of what was recommended, and definitely this very hefty penalty is the outcome for that activity. So certainly there'll be a lot more focus on some of the neobanks in terms of their risk assessments, their customer and client engagements, the onboarding process, particularly for those in the high risk category or the clients in those high risk categories, ensuring that there's adequate assessments in place. That obviously there is a lot of focus within that community on having onboarding as quick as possible, but certainly the regulator doesn't want to see that anything is falling short in spite of this pressure to be faster. Interesting to note, in Asia, the Monetary Authority of Singapore took similar actions or regulatory actions against 9 financial institutions, this time related to anti-money laundering breaches. And so there's definitely a focus amongst the regulatory community at the moment around client assessment and AML, KYC, all of these important things. So the penalties that MAS introduced for those 9 firms totaled to around about 27.45 million Singapore dollars. So quite hefty penalties there. And there were a number of overseas banks involved in that. So, and the investigations were conducted between 2023 to early this year. So certainly very timely actions going on. And it's interesting to see the consistency across various jurisdictions on this particular topic. Another huge bit of industry discussion, one might almost call it gossip, was the notion that BNY has made a bid or behind closed doors for Northern Trust's business. And that's something we've been talking about, big bank mergers for a long period of time. There's some sentiment in the US market that due to the deregulatory environment or the sentiment out there, it might be time or a nigh time for some of the bigger bank mergers to actually happen this time around. Obviously, we saw State Street and BBH fail to merge a few years ago. So it'll be interesting to see whether these rumours develop into anything substantial. There's a lot of reasons why not, but certainly it would be interesting to see if there are any legs to this particular bit of industry discussion. Now, my final thoughts for the month relate to some of the discussions I had at the Network Forum in Madrid last month. There was a great turnout to talk about T+1. I think in terms of that topic, we hammered home the need for a lot more work, a lot of focus on getting things ready for the October deadline in 2027. It seems like a long way off, but it really isn't. So I think that was something that we really reiterated. But one of the other topics that we discussed was around AI, and in particular, the impact of AI and other next generation technologies on the sustainability agenda. Now, it's not very, popular at the moment in some corners of the globe to talk about sustainability, but it's certainly something we do need to think about when we look at energy usage. Now, my panelists during my AI session raised that point. They were talking about the impact on net zero for their own organizations. They were talking about European institutional investor and retail investor interest in sustainability topics in many markets, particularly in the high net worth individual category. Definitely that and public perception is something that firms outside of the US have to be talking about and thinking about, despite the disparity of this topic and maybe some of the data challenges. But certainly looking at AI, it does have relatively high energy usage. Now, one of the stats we pulled out to highlight this point for the audience was a piece of research done last year looking at the annual and monthly energy consumption of ChatGPT, a very popular generative AI tool. Now, the monthly consumption of ChatGPT in terms of energy or carbon footprint equals to 260 individual flights to New York from London. And that is particularly high when you think about carbon accounting and how that impacts your net zero accounting as well, from the perspective of multiple regulations in the UK, in Europe as well, and an increasing number in the Asian markets as well. We've seen Hong Kong and Singapore both up their game this year, looking at sustainability focused directives and also data sharing in that area. So we've seen Green Weeks in Hong Kong. We're seeing a big push around sustainability in Singapore as well by MAS. So certainly all of these things are big topics of discussion. Definitely we need to think about how to be more innovative and think about clean tech in the area of generative AI, particularly when applied to financial institutions as well. So certainly some food for thought for all of our innovation change makers out there.